Good morning. Welcome to Morning Call. Bit soft for global markets overnight, but India's been very strong over the last few days. The Nifty's had a 300-point rally over the last 10 days or so. So momentum is strong out here, but just this morning we don't have great global tailwinds to play with. Though we are bang in the midst of earnings season out here, so there should be a lot of stock-specific activity, even if markets choose to consolidate recent gains. Mithali, hi, good morning.
Hi, good morning. On track for our best series this year, finally, and the money really started talking through this series.
Yeah, I think what's happened in the last fortnight, Mithali, is that, or last 10 days, is that confidence in Indian macro has improved for all the factors that we've been discussing, the way commodities have behaved, gold has behaved, the expectations of rate cuts which have come back. And what's interesting is that if you look at the context or the texture of the rally this time around, it's the domestic plays which have done much better compared to what was happening earlier. Earlier, IT would lead rallies, but the domestic companies would sulk. But over the last 10 days, we've seen banks, autos, even some of the infrastructure plays. And these are all plays on either interest rate cuts or domestic macro improving on the margin.
And traditionally leadership sectors.
Which have done well. And IT has started underperforming. So money has been switching out of some of the global plays into some of the domestic plays. So I think there has been some genuine reason for this rally in India, the recent outperformance that we've seen. I think the next stage now, I mean, the easy money is done. I mean, markets have pulled back 300 points from the recent lows with some good macro reason. Next week we'll probably get a rate cut. Then what? Because global markets have done well. So I think the growth questions still linger, particularly because valuations have changed a bit in the last 10 days. So I think we're entering interesting phase in the market because there are pulls and pressures. There are reasons, there are some macro tailwinds, but all the headwinds have not gone away. So I think this leg of the journey could be interesting.
Also the money equation, Udayan. I mean, Friday and Monday we got 950 crores a day. I mean, that kind of money we haven't seen in a long time.
Yeah, that's happened, and I think a lot of people over the last 3 months, partly because of India's underperformance, partly because of nothing improving on the macro front, had gone underweight on India. But I think some things have changed. So, you know, the gold and crude equation and the way it's panned out, the way inflation has come off, I think it's led a lot of global investors to come back and relook at India, which has been such a dog over the last 3 months. So I think some recalibration of ownership certainly has happened. What's more is that all the shorts have got cleaned out of the system because India was doing so badly in February, March, even parts of April, that a lot of shorts had been there in the system from the FIIs, and a large part of that has got covered up. So I think now the market's got some momentum. The bearishness, the bearish positioning has gone down, but now we need to look at whether we can get more tailwinds from the global space, because there have been some cracks in the global market with the earnings season and how it's panning out in the West. Crude is stabilizing again above 100. Gold has had a mild rebound. Yeah. So we need to just be a bit careful out here. Right now, I think the mood will be quite gung-ho. There is some logic and reason to it for sure, but the kind of rally that we've seen in Europe, the US, over the last few days, I think a little bit of caution may not be unwarranted.
It's tough to make a broad brush stroke, though, about the global setup right now, right? Like you said, Europe is strong. US markets have not cracked still, and China, of course, is this unique drag on the system.
I think we're still in a trading market, Mithali. You know, we are getting into these boom-bust kind of things. We'll have a couple of really bad months, and then there will be hope for 4 to 6 weeks, and markets will go up globally and locally. And again, something will come about in global markets, or people will start fretting about growth because growth is still not there, while valuations are expanding again. So I think we're probably going to just ping around like this for a while longer. The clean trend, despite the recent improvement in Indian macro, probably has not started. So I think we'll probably get these 500, 600 point whipsaws on the Nifty as well. Global markets will have a great stretch, and suddenly something like a Cyprus will come up. Again, they'll start selling off. So at best, I think volatile, though in the last few days, clearly we are on the right side of volatility.
Targets for the Nifty as well, and this is the more important patch because there's a bit of a been there, done that quality to the rally so far.
I think the easy part of the rally is pretty much done, Mithali, because, you know, as we were discussing earlier, the market at 5,500 was not pricing in some of the recent improvements. So what happened is that the Nifty fell like a stone down to those 5,500 kind of levels, and then some things changed in the environment which the markets could not see or anticipate, like gold collapsing or crude collapsing. So after that, the market needed to price in those things, and I think the journey from 5,500 to 5,800 thereabouts, or 5,900, sort of captures much of the change which has happened in the environment. Now momentum is there with the market, and momentum can certainly take us higher. So levels are difficult to call. When we could go to 5,900 around expiry, we could even extend this rally to 6,000. And then you need to sit back and take stock of the situation, saying, okay, we've had the 7, 8, 10% kind of rally from the recent lows. Now what? Are earnings supportive enough for the market to carry on with its journey on the way up? And people may find that earnings upgrades or even macro growth upgrades are not that easy to come about, even as some of the deficit issues might be getting slowly better, if not completely sorted. So I think probably 75–80% of this leg of the up move, if not more, is probably done. The market needs to consolidate now, and doubly more so because crude is not completely collapsed, and gold is showing signs of sort of finding a temporary bottom around 1,400. I think markets need to digest recent gains, particularly because some of the clusters like private banks have run up quite significantly in the last few days. Their rallies have been to the tune of 11, 12, 15%. So much more from here seems like stretching it to me, despite good results from private sector banks. And therefore, in this zone of ballpark 5,900, the market should run into some kind of resistance, and traders might look to cash in if they got in lucky and got into the market maybe 5–6 days down the line.
Jet should see a good reception today?
Well, I think so. It's a good deal. The money comes into the company, but most importantly, I think there might be a trace of confusion about the open offer. So if traders were building up for the open offer this morning are not quite sure, it does not follow that there will be an open offer at 750 plus. So there is a little gray area out there, but the stock should open up because strategically it's an important deal. I mean, always that you look at the deal, money comes into the company, balance sheet is improving, strategic advantages of tying up with Etihad, the opportunities which open up in the international space. I think it's a win-win for Jet. I think Kingfisher should slowly start moving towards the 0 rupee level because now this mild hope that Etihad might do a deal with them also goes out.
That's still around?
So, it's $6, but I don't see why it should be 6. It should probably be 0. But it would be interesting to see what Spice does today, because after this deal, maybe people will be talking about another partner getting into Spice, etc. So that might get lifted with rub-off. But Jet should slowly start moving towards 700 this morning in that direction. And once there is more clarity on the open offer, I think the stock will probably go down to the open offer arbitrage kind of price, which will be a little lower than that. But it's a good deal that they have cobbled up, no question about that.
Absolutely, and it will see a reaction in the market as well.